welcome to Sectors Up Close. I'm Elena Casas. Today we're looking at consumer discretionary stocks and my guest is Aoifinn Devitt, Chief Investment Officer at Moneta Group. Soaring interest rates, rising prices and a huge amount of worry about the direction of the economy. It's little wonder then that the consumer discretionary sector has suffered a mauling over the past 9 months. It's down by more than 27% so far this year. The broader S&P 500 is, by comparison, down a little more than 24%. That is still not a great performance, but a clear indication of where the pressure points lie for investors. And fund performance has been no better, suggesting that even in an actively managed environment, performance has been underwhelming, to say the least. Now, that underperformance in consumer discretionary stocks is perhaps not surprising when you consider it includes big-ticket companies such as Tesla and Ford, and even Nike. But it also includes more modest components such as McDonald's and the discount retailer TJX. So perhaps that wide range of companies means this is a sector that might weather the coming storm. Well, to find out, I'm joined now by Aoifinn Devitt, Chief Investment Officer at Moneta Group. Aoifinn, hi, thanks for joining us. As we were saying, these stocks have already fallen substantially this year. Do you think the worst part of inflation worries and growth concerns have already been priced in?
That's an excellent question. And the question really is around how much of the bad news got out of the system over the course of the third quarter. We did see some very bad signs coming out in terms of building inventory, a suggestion that the consumer demand had started to slacken, and that this was already being factored into big, deep discounting and to much slacker consumer demand. So to an extent, a lot of the bad news is out of the way for many of these stocks now. We've seen EPS estimates come down considerably from in around the high 20s to 30% of reduction, not only of some of those big retailers you mentioned, but also the likes of some of the electronics retailers. So when we've seen these EPS consensus estimates come down by so much, there is a sense that now perhaps it is upside that we're going to see from here.
We did see stronger consumer confidence and retail sales figures in the US for August. Is this still pent-up demand from the pandemic? Are consumers still spending substantial savings from that time?
There definitely is this factor. We've seen that because we can see the amount of money that's in money market funds. Areas that are chief discretionary areas of expenditure, such as that new car, that cruise, that holiday you hadn't taken, all of that, there was a supply issue. So it was actually challenging to spend that money. So that pent-up demand is definitely still there. That perhaps has given a lifeline to some of the spending that we haven't otherwise seen.
What about the impact of the economic slowdown in China, particularly? Nike, which has really dragged this index down, blamed China for some of its woes. How important is that for the wider sector?
Definitely, China is what we've called a slow-moving crash in terms of its property market. We've seen a slowing of growth. We've seen sluggish consumer demand and very little attempts to stimulate that. So definitely China as a counterparty, as a trading counterparty, and its weakness and its ongoing zero COVID policy, that is going to be a worry for any of those stocks that have exposure to China. But more broadly, the strong dollar is an issue for any US manufacturer that has exposure, because that is, of course, making those exports more expensive. And that is going to be a huge problem. In the inverse, we're seeing that retailers based elsewhere, where there have been a weakening of the currency, have actually seen their stocks rise and be nicely counter-cyclical to a weakening currency, particularly the UK would be an example of that.
How differently do these factors play out at the luxury end of the consumer spectrum? Recently, of course, we saw lots of demand for the Porsche IPO, but is that just a one-off, or are we going to see strong demand for luxury companies across the board?
The strong demand for Porsche is an indication that there is definitely ongoing strong demand for luxury goods. We've talked before about this being a K-shaped recovery. It is not affecting everyone equally. Equally, inflation is different for every single individual according to what their basket of goods and services looks like. So, of course, China would have been a strong sense of that luxury demand, a strong source of that demand. And with that slackening, I'm not sure that the slackening is occurring at the very high end consumer looking at purchasing those exclusive goods. If we only have to look at the demand for electric vehicles to get an indication for how robust and enduring the demand for that exclusive product is. We know a lot about the rising tide in terms of private wealth. There's a lot of money on the sidelines for luxury goods, so that probably is going to be an exception.
From an investor perspective then, Aoifinn, how would you approach this sector? Where do you see the best bright spots?
It's interesting that you first cited the poor performance of active managers at the beginning of this segment, because it's true. We've been watching how active managers have really failed to protect capital when there's been a large-scale momentum sell-off in a sector. We saw that in tech, we saw that in consumer discretionary. However, on the upside, that's where we believe stock picking will make more sense. So there's very different dynamics and factors facing each of the companies in the sector. And it's really about getting under the hood, looking at the fundamentals. And that's the kind of environment that we think active managers will do better in. But of course, it is going to be about stock picking. It's going to be case by case, looking at those companies that have maybe more or less exposure to a strong dollar, and go from there. I think there are abundant opportunities, and that comes from the fact that there have already been such major sell-offs in these areas, perhaps based on that negative momentum. And now it's time for a little bit of bottom fishing.
Well, thanks so much for that insight, Aoifinn Devitt, CIO of Moneta. Well, that's your roundup of the consumer discretionary sector. I'm Elena Casas, and this is Reuters.